They also predict we're going to continue to have deficits for the next 5 years, and that we're likely to reach a record at some point in the next 5 years. So if you have the same kind of thing play out, and we are at, call it even $35 now, if you get a correction and you get this, 300% gain, you're looking at triple digit silver. And I think it could happen in this cycle, frankly, over the next few years. I think we could absolutely see that happen.
And the real one that's why I, would predict $100 silver, back when it was $5 or whatever. It's because of the loss in faith in fiat currencies on a world basis. This is what's going to put silver higher. It's going to be the margin, which is monetary demand, which ebbs and flows. When that strengthens, re-strengthens, and strengthens again, you're going to see triple digit.
Silver just surged to $41 per ounce, its highest level since 2010. But this is no ordinary commodity rally. Unlike gold, which thrives mainly on safe haven demand, silver sits at the intersection of finance, industry, and geopolitics. PeterKrauth warns that silver's powerful rally is just getting started. The metal has nearly doubled since 2023, driven by a perfect storm of tight supply. He sees a staircase pattern where $40 becomes the next floor, with the potential for $100 silver if history repeats itself as the Fed begins cutting rates. Multiple sources from early 2025 confirm Krauth's view that silver's price is driven by a doubly squeezed supply from both industrial and investment demand. They also confirm his view on the growing demand from solar power, EVs, and other technologies. Markets are already bracing for silver to be swept into tariff measures. If that happens, the ripple effects could spread quickly across the globe. The U.S., having labeled silver a critical mineral, would likely move to build up its own strategic reserves. In his outlook, DavidMorgan, who predicted triple-digit silver back in 2003, says the moment is here. He points to three drivers, including persistent physical deficit, a move from paper to physical metal, and a global loss of faith in fiat currency. The big run of silver to $100 requires extreme conditions, like an extreme silver shortage, a series of rate cuts, hyperinflation, or a combination. Those conditions are not visible, not yet, with the only exception being silver shortage. Before we dive into PeterKrauth and DavidMorgan's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
It's been quite a strong rally. There's no question about it. We've nearly doubled from the lows of, I think it was February last year, somewhere close to $21, $22. Just fantastic rally, and more than due. But I think that you really do have a lot of market participants starting to realize, like the broader sector of participants are really realizing the potential of silver, the tightness of supply, the strength of demand, the robustness, especially on the industrial demand side. And then, as you always have, that kicker of investment demand that ebbs and flows, but I think that really is starting to flow. It's interesting because when you speak to some bullion dealers, they will tell you that they're buying actually a lot more silver, investment silver, than they are selling, but the demand is coming from somewhere. And I think we've talked about this before, but you've got these big retailers like Costco and Walmart who are selling investment silver coins and bars and so on. And they perhaps are picking up a lot of that slack. But we've seen this consolidation. We had this surge for a little while in 2016. And then when COVID hit, silver went crazy and we had this big step change. And about 15 years ago, in a former occupation related to this, I called silver the gold price chart the golden staircase. And frankly, we're starting to see the same sort of thing happen with silver, where you've got this extended period where it consolidates at a certain level, and then it breaks out and then consolidates at this new higher level, and you see this happening over and over. And these levels, these steps, this staircase, the steps can be different lengths, but it is what we're starting to see happen. And that the more obvious step, I think, if you go back about 10 years, ended in around 2020, and then the next one started then, and then we went from, say, the 30 to 30-ish range. We stayed in that kind of 26 to 30-ish range as a high for that step. and have moved higher now. And will 40 hold as the next step? I don't know. I think it's very possible, but we are starting to see that play out. And one last point: what will it take to get us to triple digits? Well, about a year and a half ago, I came out with a chart that showed how silver reacts in Fed rate cutting cycles. And it lags gold typically, not this time it looks like, but in the last three Fed rate cutting cycles, silver tended to bottom around halfway through the Fed rate cutting cycle and took off. And the average of those three previous times, if you cherry pick the bottom and the top of that of those silver rallies, which took a matter of a few months up to a year and a half, maybe almost 2 years in some cases, over 300% gains. So if you have the same kind of thing play out, and we are at, call it even $35 now, if you get a correction and you get this, 300% gain, you're looking at triple digit silver. And I think it could happen in this cycle, frankly, over the next few years. I think we could absolutely see that happen.
Well, I'm probably the first one that put it in print. I think it was about 2003, and get the skinny on silver investing. I wrote that we would see $100 silver, so that's obviously triple digits, and that was back several years ago, 22, 23 years ago. So I think three main bullet points here. One is the sustained deficit in the physical supply, because the physical market is going to have to take over the paper paradigm, and it has at times, but it's been in fits and spurts. In other words, it's gone to where the spreads have been extremely high on the retail side, where we had a shortage or a squeeze, but that was only part of the market. The retail side is important, but it's not the total picture. So supply deficits eat from both sides, from investment demand, be it retail or institutional, and industrial demand. Second one is investment flows. They've got to shift from paper promises into real metal. And that has taken place for really decades. Again, on the retail side, the institutions have been a bit remiss to get in the silver market as they have in times past. That's changing. I know we have other questions, and I know what they are, so we'll be talking about a little more about that. But I think what you see, more institutional demand for monetary purposes outside of the industrial side, and the retail comes back into the market, which has been stagnant for quite some time now. In fact, there's really more sells than buys at the retail level. That will, of course, move the price higher. And the real one, that's why I would predict $100 silver back when it was $5 or whatever, it's because of the loss in faith in fiat currencies on a world basis. This is what's going to push silver higher. It's going to be the margin, which is monetary demand, which ebbs and flows. When that strengthens, re-strengthens, and strengthens again, you're going to see triple digit. And if this is to occur, I'll say if, not when, but when it happens, I am going to lose some wealth, because I have said for years I will put a gathering together for silver bugs here in Spokane, where we started the Silver Summit so many years ago. And I'm not going to pay your airfare, but once you get to the event, it's going to be on me for a few hours. I'll probably have an open bar for like 4 hours. And when I keep drinking after that, I'll be on you. But I'll put out a spread when we hit $100 silver. So that's been a commitment I made years and years ago, and it looks like it could happen here.
The silver market just changed forever. DavidMorgan calls Saudi Arabia's SLV purchase a watershed moment, as it signals that central banks now have silver on their radar. PeterKrauth then highlighted that the deepening supply deficit, now over 800 million ounces since 2020, leaves the market structurally tight. The only way for the above-ground supply to return is at much higher prices, making a massive rally inevitable. The magnitude of the current silver market imbalance represents a fundamental shift from historical patterns. The deficit isn't merely a statistical curiosity, but a market-defining reality with far-reaching implications. The Shanghai Gold Exchange reported record silver withdrawals of 285 million ounces in 2023, indicating substantial physical demand from Asian markets. Meanwhile, JP.Morgan analysts noted in their fourth quarter of 2023 precious metals outlook that silver delivery notices on COMEX have increased 300% compared to historical averages, reflecting intensifying demand for physical metal.
the last, say, 5 years, if that was including 2025, which yeah, I was with including the forecast for 2025, then we're looking at 5 years of silver deficit equal to a full year's mine production. That's pretty stunning. It obviously doesn't include recycling, which is about another 180, 190 million ounces a year. But it's really quite telling. Now, what I want to point out is that so this started back in 2021, according to the Silver Institute, and that was the first year of a negative market balance, so a silver deficit. But interestingly, the way that they calculate and they display their numbers, they show investment in silver ETFs, which they call ETPs, exchange traded products, separately. If you include the money that flowed into those products in 2020, there was a huge shortfall that year. It was 280 million ounces. And I mean, I haven't done the math, but I have the numbers in front of me. And frankly, if you add that together, you're well over a billion ounces, as far as I can tell. If you look at that full number of the money that flowed into the ETF since then, some years, some money had flowed out since then, but there was a really big year, 2020. It was 330 million ounces. And then you had a couple of years, 2022, 2023, where the money had flowed back out of the investment ETPs. Now, if you ask them for their explanation why they display these numbers separately, they say it's because, well, this is silver that's not consumed. And so therefore, technically it's available to the market. And that's a good point. However, they do include, when they look at total demand, they do include coin and net bar as consumed silver. And yet that's available to go back to the market. So why is silver that's bought physically, invested in physically, included in demand, and yet silver that's bought, through silver ETFs not included? So I like to include it. Frankly, it's true that yes, both are available to come back, but we haven't seen much of it come back to the market. And if you look at the market balance for this year, just to give you some perspective, 2023, there was a deficit of 200 million ounces. Last year was a deficit of about 150 million ounces, and they're saying that that's going to drop off a little bit, but still stay substantial at about 117, 118 million ounces. So they're saying that there's an existing deficit. We're going to see that continue. By the way, they also predict we're going to continue to have deficits for the next 5 years, and that we're likely to reach a record at some point in the next 5 years. So that said, if you add back, which as I say, they show separately, but they do show all the numbers. If you add in what they forecast of investments into silver ETFs, this year is actually going to have the third highest overall silver deficit over the last decade. So it's quite interesting to see that they're actually forecasting that investment into silver ETFs is going to grow this year by 14% over last year, and that's going to put us, as I say, into the third highest deficit overall. We've talked about this before. You've had comments from us, both of us, and as I recall, David's pretty much in agreement that it's true that there's plenty of silver out there, probably billions of ounces that are held privately, difficult to quantify, and that these can come back to market, and that's the argument. And again, I don't want to speak for David, but I think he agrees on this point that the question is always, yes, that can and likely will come back to market, but at what price? $40, I doubt it. We haven't seen that happen. 45, I still doubt it. 50, maybe. People are going to say, I've held on to this stuff for 30 or 40 years. Finally, despite the loss of purchasing power on the dollar that they get back for selling that silver. I just don't see it. I think it's going to have to be at much higher prices than that, and I think that's going to help to keep the market really quite tight along the way.
I think it's noise from the aspect of how much money the Saudis have.
Yeah.
But as far as in the bigger picture, it's a watershed moment. Until now, central banks, save Russia, haven't been buying silver at all. Saudi's buying, as you said, 1 million shares. The SLV is not physical stacking, but it signals something more important. And that is now silver is on the radar of sovereign wealth. Central banks moved deliberately, so this could be the beginning of a trend. If others follow, let's say Turkey, India, or even China, we could see structural change in silver's demand profile, similar to what we've seen with gold over and over and over again. And a couple of things for the record on the critical metal. I think technically you're correct, Peter, but I did write an article on our blog at themorganreport.com on how the Silver Liberty program, it's referred to as Silver Eagle. I'm kind of a stickler for, numbers especially. That started from the strategic silver stockpile from the Defense Department. And at the time, the powers that be thought, oh, what's all the silver good for? It's taking up space. Let's sell it. And they wrote it into law in 1985, started the program in 1986. Strategic has a better connotation than critical, actually. Strategic is held for reasons of national security. And that has been pushed back on me by others. I'm not saying, Peter, it wasn't. I'll just leave it nameless for, let's say, gentleman purposes. But anyway, I just want to get that out there because there is some things. One thing I'll vent one more time. I say this over and over and over again. I don't know how many of my associates have said, the natural ratio of silver 16 to 1. It's not true. The highest ratio it's been through all of recorded history is 12 to 1. And now it's 7 to 1. So the 16 to 1 is the monetary aspect of silver. That was set by Sir Isaac Newton. That was 15.5 or 16 to 1. But mining wise, it's 12 to 1, 10 to 1, 9 to 1, 8 to 1, now 7 to 1. So sorry for letting me, or sorry, I'm not going to be sorry for venting. I'm just, again, especially on the numbers side. And I'll leave it there, Jesse. But honestly, I'll repeat, this is a watershed moment. We see others start coming in in size. You and I buying nearly 1 million shares of the SLV, that's huge, as an individual investor. I mean, who could do that? But from a sovereign wealth, it's hardly anything, which is interesting when you think about it. Because if they come in, and as I said earlier, they had enough to where they are an authorized participant and say, oh, that stuff we have called SLV, ship it over. That would be fun.
Over a longer horizon, analysts see further room to run. A new report by Sprott builds a bullish case for precious metals, predicting a strategic shift away from the US dollar and treasuries under the current environment and into hard assets. In silver's case, the case may be even stronger as the metal's fundamentals are underpinned by powerful structural forces, namely, a prolonged supply deficit and a tightening physical market. Wallet Investor and Gov Capital had more optimistic forecasts for 2030, with potential prices around $48 to $50, according to Capital.com. Will the coming years bring extreme conditions, including shortages, monetary shifts, or rate cuts that finally propel silver into triple digits? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.